Hello, welcome to today's webinar on employee versus contractor and why it is important to get it right. I'm Liliana Harris and I'll be your facilitator today. Let's now introduce the topic of today's session. Over the years, there has been a significant shift of how businesses operate. Many businesses have opted for contractor arrangements to capitalize on the freedom they provide. However, it is important that employers understand that rights and obligations vary between contractors and employees. There are key tax and superannuation considerations that need to be front of mind for employers. There is a fine line between contractor and employment terms, and hefty fines, significant implications, and missed opportunities for those that get it wrong. Today you will hear from a national panel of experts within Mazars. HR and IR partner Sherry Laird. Sherry Laird leads Mazars Queensland HR's consulting division and has over 25 years industry experience. She has an inviolable reputation as a leading human resources and industrial relations consultant to clients in both the private and public sectors. Jamie Towers. Jamie is a partner of Mazars Tax Consulting Division and has been providing taxation advice to a diverse range of clients, from family businesses to listed corporates, since 1995. His years of experience, combined with his presenting and training experience, allows Jamie to take the complexity out of taxation and to explain the issues to clients in a simple manner. Stephen Baxter. Stephen brings over 33 years experience within the indirect tax field, specializing in GST planning and transaction advice, as well as land tax dispute and planning advice for developers, investors, and family property portfolios. Stephen has been at the forefront of the development of indirect taxes in Australia, with his membership of the Federal Treasurer's Board of Taxation Advisory panel since 2008. I will now hand over to Sherry Laird, who will discuss about contractor arrangements in the light of two recent High Court decisions. Over to you, Sherry Laird.
Thank you very much, Liliana, and welcome everyone on the webinar. I'm, as Liliana said, I'm Sherilyn Laird, and I get the unenviable job of trying to explain the recent High Court decisions. Let's go to the first slide, please. Okay, so the first question I think anyone asks is, do the recent High Court decisions in fact make a difference? The answer to that, of course, is yes. The decisions of the High Court, which were released on the 9th of February 2022, have been long awaited. There are a number of other decisions in both the Federal and the Federal Circuit Court which have been held in abeyance awaiting the outcome of these High Court cases. Our research would indicate only one of those have been released since this decision, and we will look at that as we go through the seminar. If you have had to deal with the vexing issue previously, you would be aware that the previous multi-factor test, which was the previous test applied by the High Court, would often result in inconsistent outcomes. The High Court, in revisiting this important issue, has identified providing certainty to both employers, employees, and or contractors in that later category as a major driver in its function, and in doing so also recognised that the previous multi-factor test failed to provide the parties with any level of certainty. But before looking at these actual decisions, let me state that although this is a giant leap forward in terms of achieving some certainty in determining who is an employee and who is a contractor, and that commentators have used terms such as contract is king and primacy of contract, this does not mean that the courts will never look behind a contract. In fact, the High Court has made it clear that they will do this to determine the true contractual nature of the relationship. We could move to the next slide. It's a bit unusual to start a presentation with the key takeaways, but I want you to keep these in mind as we talk about the decisions, as I think that understanding what the High Court eventually reached will help you to understand their reasoning in coming to these conclusions. Importantly, these two High Court decisions on employee-contractor follow the same rationale as the High Court applied in settling the issue of who is a casual employee. You may recall that in 2021 the High Court released a decision which again emphasised the primacy of contract in determining in that case of who is a casual employee and who is not. In that case, the High Court found that if an employee is contracted as a casual employee, it becomes somewhat irrelevant what occurs post the contract being formed. They've applied a somewhat very similar approach in this case. And as I mentioned before, what is really important for those of us who practice in this area is that this new test replaces the multi-factor test, which among other challenges in trying to apply it, importantly resulted in different outcomes in similar factual situations. If the relationship was challenged, if you had an employee who said they were a contractor, which was the more rare arrangement, more likely to a contractor who subsequently sought to assert that they were an employee, there was essentially no safe way to know what the outcome of that challenge was going to be, because different courts or tribunals would come to different decisions based on a very similar fact situation. Okay, so what are the key determinatives? Where the parties have committed the terms of their relationship in writing. Importantly, and where the contract is otherwise unchallenged, it is that the arrangement is not purported to be a sham or otherwise ineffective. The question of whether a worker is an employee or a contractor is to be considered through the principles of contract interpretation. So we've moved away from the multi-factor test to a contractual interpretation approach. Where there is an appropriate written contract, an assessment of the express terms of that contract will be given precedence over the subsequent conduct of the parties. And in the absence of a written contract, however, post-contractual conduct will remain directly relevant. And that was particularly relevant in the one case that has been decided since these two High Court decisions were handed down, and we'll talk about that shortly. If we could move to the next slide, please. So what were these cases that were decided by the High Court? So there were two cases, CFMMEU and personnel contracting, and another one which was ZG Operations Australia Proprietary Limited and JAMSEC. But let's look firstly at the personnel contracting case. The employee or the worker involved in that case was a person by the name of Mr. McCourt. Mr. McCourt was a backpacker from the UK. He had no specific experience in the construction industry. He had no specific skills relevant to working into the construction industry. However, and I'm quoting the court here, he got himself a white card, purchased a hard hat, purchased some steel cap boots and high-vis clothing and applied to personnel for work. Who'd have thought that was all you needed to do to work in the construction industry? But that's what he did. He went to personnel and he applied for work, and he then signed an administrative services agreement. That administrative services agreement with personnel, who are a labour hire company, described Mr. McCourt as a self-employed contractor. The contract went on to say that personnel were not liable to pay Mr. McCourt any employment-related entitlements, any leave, any statutory entitlements, and he was paid an hourly rate for the hours that he worked. The hours that he worked were reduced to writing in the form of an invoice and sent to personnel weekly. Mr McCourt was assigned to work for Hanson, who is a building contractor. Hanson was responsible for his general supervision, but there was no contract between Mr McCourt and Hanson. The only contract was between Mr McCourt and personnel. He served 2 assignments with Hanson in 2006 and 2017, and when he completed his second assignment, the CFMMEU, on behalf of Mr McCourt, claimed that Mr McCourt was an employee and was therefore owed entitlements under the relevant award. The matter went on first instance to the Federal Court, and it was found that Mr McCourt was an independent contractor. That decision was appealed to the full court of the Federal Court, and he was also found to be an independent contractor. The sting in the tail is that that was then on appeal to the High Court, and the High Court found, when considering the contractual arrangements, that Mr McCourt was in fact an employee. So although this case and the JAMSEC, next slide please. Although this case and the JAMSEC case, which we will talk about next, were determined together, it was the personnel case which was the primary judgment. The following extract, I think, quite simply outlines the High Court's new approach to determining whether a worker is an employee or a contractor. Where the parties have comprehensively committed the terms of their relationship to a written contract, the validity of which is not in dispute, the characterisation of their relationship is one of employment or otherwise proceeds by reference to the rights and obligations of the parties under that contract. Where no party seeks to challenge the efficacy of the contract of the Charter of the Parties' Rights and Duties on the basis that it's either a sham or rather otherwise ineffective under the general law or statute, there is no occasion to seek to determine the character of the parties' relationship by a wide-ranging review of the entire history of the parties' dealings, which was the old multi-factor approach. The old approach was to look very detailed at a number of indicia about how the relationship operated, more so than to look at the contractual arrangements entered into in the beginning. Such a review, the High Court said, is neither necessary nor appropriate any longer because the task of the court is to enforce the parties' rights and obligations, not to form a view as to what a fair adjustment of the parties' rights might require. Went on to say it is the task of the courts to promote certainty with respect to a relationship of such fundamental importance. Essentially, this is so where the parties have taken legitimate steps to avoid uncertainty in their relationship. The parties' legitimate freedom to agree up the rights and duties which constitute their relationship should not be misunderstood. It does not attend, and this is really important, to simply attaching a label to describe their relationship, which is inconsistent with the rights and obligations otherwise set forth in the written document. Keep in mind, in personnel, Mr McCourt had entered into an agreement in the beginning which described him as an independent contractor and described personnel as someone who did not owe him any employment rights or obligations. In making its decision, the High Court commented that previous cases had placed too much emphasis on the description of the relationship and had been wrongly decided because of that. The High Court, through an assessment of the rights and obligations under the contract between personnel and Mr McCourt, held that Mr McCourt was an employee, and the things that they relied on in reaching that conclusion was that the agreement, so the written agreement, confirmed a promise by Mr McCourt to personnel to work as directed by personnel and its clients, and in return Mr McCourt would be paid in performance of that promise. Secondly, the right to control the provision of Mr McCourt's labour was an essential asset of personnel because it was a labour hire business. Under the agreement, personnel was entitled to determine for whom Mr McCourt would work, and under clause 4 of that agreement obliged Mr McCourt to operate in all respects with personnel and the builder in the supply of labour to the builder. Personnel had the right to control the work that Mr McCourt did, and that if Mr McCourt breached his obligations, it was personnel and not Hanson who was entitled to terminate the agreement. Essentially, they said it didn't matter what you called Mr McCourt, the terms of the contract were one that the overall effect of that agreement meant that Mr McCourt was to serve in the personnel's business, and that it was impossible to conclude that Mr McCourt was in business in his own account. So essentially the High Court looked at the contract which said independent contractor, and then looked at the terms of that contract, and that's what's important, not the label you give it. Looked at the terms of the contract and said the terms of this contract disclose an employment relationship. They do not disclose a contractor arrangement. The title or label given to the relationship was not determinative. What was determinative was the terms of the written agreement which disclosed an employer-employee relationship and not an independent contractor relationship. We can move to the next slide, please. Okay, so there were two cases, as I say, Mr Jamsek and Mr Whitby, who really doesn't get much of the fanfare because his name's not in the published decision in the title. They were both truck drivers who were originally engaged as employees of a lighting company. At about the end of 1985, all 5 of the company's truck drivers were offered the opportunity to become contractors on a take it or leave it basis. So there was going to be no more employed truck drivers, but if you wanted to, you could buy the truck and you could contract back to us. There was no option to remain as an employee. All of those 5 truck drivers, including Mr Jamsek and Mr Whitby, became contractors. Both Mr Jamsek and Mr Whitby set up partnerships with their wives. They executed written contracts with the company for the provision of delivery services and purchased 4-tonne trucks from the company. The partnership invoiced the company and the company paid the partnerships for delivery services. The partnership income was declared for the purposes of income tax and split between each truck driver and their wife. The revenue generated by the partnerships was used to pay truck expenses and business operation costs. The arrangements were terminated in 2017 and Mr Jamsek and Mr Whitby commenced legal proceedings alleging that they were owed statutory employee entitlements. So essentially what they were saying is it doesn't matter that we signed this contract, we've really been operating in an employer-employee relationship. At first instance, their claim was dismissed by the federal court judge, found that they were in fact independent contractors. However, in proof that there was no consistency in the multi-factor test, on appeal, the full federal court found they were found to be employees. In its reasoning, the federal court reasoned that the disparity in bargaining power between the parties affected the contract pursuant to which the partnerships were engaged, so that the reality of the relationship between the company and each respondent was one of employment. In the decisions released in February, which set the new rules around determining employee contractor, the High Court went back to the original decision and found that Mr Jamsek and Mr Whitby were independent contractors. Notably, Mr Whitby's partnership was dissolved in 2012 and he then supplied transportation courier services as sole trader using his own ABN, but the High Court was satisfied that that didn't change the contractual arrangements in place and that Mr Whitby as a sole trader was carrying on a business based on the declarations made and the deductions he claimed from his tax return. So if we could go to the next slide, please. I wanted to carry, although this presentation is primarily about those two decisions, I just wanted to also bring to your attention that there has been a decision made by the Federal Circuit Court following these two High Court decisions. This was a decision which was made or released in March, and it was one of those cases that was sitting in abeyance waiting to be determined. Here, the worker claimed that he was an employee and was seeking statutory entitlements such as leave, superannuation and redundancy. He had worked solely for one organisation, averaging 38 hours per week. The worker argued that there was a verbal contract struck in 2012 which established his status as an employee. There was, however, no written contract in this case. The judge said that in the absence of a written contract, he was free to ascertain its terms by looking at the parties' post-contractual conduct. So we've not moved completely away from looking at the operation of the relationship, but it is looking at the operation of the relationship in the context of what is the contractual arrangements, what are the rights and obligations and duties which arise when looking at the actual nature of the conduct. In 2012, in this case, there was an agreement that the worker do more work for the construction company. The terms of how that would operate were found to be at best vague. The court said that although the arrangements were vague, it was clear that there was no agreement that the worker be an employee of the company. The subsequent conduct of the parties in relation to the worker and his company by rendering invoices and supplying labour other than the worker himself at times indicated that the arrangement agreed was that the worker, through his company, would supply labour to the construction company. The company of the worker had rendered invoices to the construction company prior to August 2012 in relation to the workers' labour, and that arrangement continued beyond 2012 just for more hours. So yes, the person was doing what would look like a full-time job, a 38-hour week, but the court said that was just a continuation of what had happened before. Importantly, the court also noted that the treatment of income into the workers' company from the construction company in terms of tax and expenses was further evidence that the contract was between the company of the worker and the construction company. The court referred to the decision in JAMSEC where the High Court had made plain that the tax arrangements are highly relevant in determining the question of whether a person is an employee. Note, highly relevant does not necessarily mean determinative, however. The court noted that there were elements of the evidence before it which might be indicative of an employment relation, such as the exclusive nature of the arrangement and the substantial hours involved. However, this occurred in the context of all witnesses describing the relationship between the workers' company and the construction company as being on the basis of what was a contractor arrangement, a contractor agreement, particularly evidenced by the fact that the company would issue invoices in account of the labour. Therefore, the reference back to the actual facts of the arrangements are not irrelevant. We have not moved to a situation where if you just write something down or make some agreement that is in itself determinative, the court can still look behind that, but that they are looked at in the context of what it discloses about the nature of the contractual arrangements between the parties. Okay, let's move on to the next one. So, what does it mean in practice? If there is a written comprehensive contract, it will generally be determinative the nature of the relationship between the parties, provided the contract is not a sham or otherwise ineffective. Independent contractors should have a comprehensive contracting agreement, a contract in place which sets out their duties and obligations within the parties' relationship prior to commencing the contracting work. Employees should have a comprehensive employment agreement contract in place prior to the commencement of an employment. A contractor agreement and an employment agreement are very different in terms of the duties owed between the parties. Written contracts should clearly and unambiguously establish the true nature of the relationship between the parties. It is not sufficient to merely label the relationship. Personnel being a perfect example of where the label was not determinative. It was the rights and obligations contained in the contract itself which determined the true nature of the relationship and not the label that had been attached to it. Once a valid contract is in place, which sets out unambiguously those rights and obligations, it will no longer be necessary to track the old indicia, such as control, independence, exclusive service, etc., to make sure that the relationship did not morph from one arrangement to another. It does not mean that employers could engage in sham contracting. However, there is definitely more scope to safely engage independent contractors than previously existed, provided it is done properly. So it is not enough to just simply say, I'm engaging you as an independent contractor. You really need a comprehensive document which sets out what are the obligations and rights which create the contractor arrangement, which is different to an employment relationship. If we could move to the next slide, please. So what should you be doing? Do all of your independent contractors have comprehensive written contracts? And do your employees have written contracts? If the answer to one or both of the above is no, you really should, in our view, be putting those contracts in place. It doesn't necessarily mean you will undo things that have happened in the past, but it certainly will give you more consistency, more certainty moving forward. Certainly if you're engaging new people, be they employees or contractors, we would highly recommend that you put in place an employment contract, and that includes for people who are covered by awards. Awards cover certain industrial rights, but they don't cover all of the rights and obligations between employers and employees, and therefore an employment contract would be ideal. If we could move to the next one, please. Sham contracting. I just wanted to make sure that everyone was aware that the decisions of the High Court, as I've said a couple of times, doesn't mean we can just simply say you're a contractor and be done with it. The sham contracting provisions contained in the Fair Work Act have not been amended. They may need some tweaking following these High Court decisions, but at this stage they remain completely effective. And sham contracting occurs when the employer represents an employment relationship or a proposed employment relationship as an independent contractor arrangement, dismisses or threatens to dismiss an employee for the purposes of engaging them as an independent contractor, and makes a knowingly false statement to persuade or influence an employee to become an independent contractor. So just saying contract is king or contract is primacy doesn't mean we can go changing all of our current employees to independent contractors. If they are employees, they are employees. But if you want to enter into independent contractor arrangements, you can do that as long as it's not a sham contract, doesn't fall into one of these categories. So what happens if we could move to the last slide? What happens if you're getting it wrong? If you have someone who should be an employee who is not properly engaged as an independent contractor, the risks of getting it wrong are wage and related costs, back payment of wages if found to be less than the money they'd received, accumulation of personal and carers leave, accumulation of annual leave, and accumulation of long service leave. Those things can cost a huge amount of money if you get it wrong. People can make claims going back 6 years. There'll also be costs in terms of your payroll tax variation and your workers' compensation costs if you've not declared wages. And finally, if the costs of getting it wrong aren't enough, there are some civil penalties which can be applied if you've particularly engaged in sham contracting, and the courts can impose fines on individuals and corporations, and that the fines are per contravention. So if you've done it on numerous occasions, these fines can in fact be multiplied by the number of occasions on which particularly someone who ought to have been an employee was engaged as an independent contractor. So that's it for me. Hopefully that's given you some information about these two High Court decisions and a subsequent decision of the Federal Circuit Court. And if you've got any questions, I believe we've got a question and answer session at the end. So back to you, Liliana.
Thanks, Sherilyn, for your very insightful presentation. No doubt employers need to consider carefully in the light of these court cases the way agreements are drafted and worded and seek appropriate advice. I will now hand over to tax partner Jamie Towers, who will highlight the key tax and superannuation considerations surrounding employment versus contractor relationships. Over to you, Jamie.
Great, thanks Liliana, and thank you Sherilyn. And while I've read the actual cases with my tax eyes, it's always good to hear a HR industry perspective. I've actually learned a lot, Sherilyn, so thank you for that. Next slide, please. So I'm going to talk about what this means from a tax implication. Now, Sherilyn had spoke about the contract is king in setting out whether someone is an employee or a contractor, and I'll take you through what the ATO considered was employees and contractors, and then we'll get into what the decision means from a tax perspective. So traditionally, the ATO had again followed that multifactorial test that Sherilyn had talked about. So we're looking at, well, what are all of the factors in the relationship between the individual and the person employing or engaging them. And so the indicia of an employee, it comes down to the common law. So the first thing is the master-servant relationship, and that's one of the key issues. So does the person who's engaging the services get to dictate what you do, when you do, and how you do it? So do they have that master-servant relationship? Next thing is how are they paid? So are they paid by the hour, or are they paid to produce a result? And does the individual bear any risks in supplying those services? And do they have to supply their own equipment? So they're the key traditional indicia of being an employee. And then on the other side, from a contractor, well, they are able to engage with the person contracting their services and negotiate their own terms. They're able to dictate who does the work and, to an extent, when and how they do that work. Often, or generally, they're paid based on an agreed amount. So sometimes they'll quote up front a fixed amount, or it can be paid on, say, a daily rate for a fixed period. Now, if the contractor makes a mistake, they bear the commercial risk. So they should have insurance, and they should rectify any mistakes that they've made in the provision of their services, and they will generally provide their own equipment. Now, on the next slide, we've got a table that goes into a lot more detail. So from the employee side, they've got an ability to subcontract and delegate, if there is an ability to subcontract and delegate the work, well, then they're not generally going to be regarded as an employee, but would sit on the side of a contractor. And the basis for the payment. So again, if you're paid on an hourly basis or on a piecemeal basis or a commission for sales that you've generated, you're more likely to sit on the side of the employer rather than contractor. And the table goes through those issues we just talked about. So equipment and tools, bearing the commercial risks. Again, there's a focus on the control over the work. So who gets to direct the way in which the worker does the work? So if you're an employee, well then the person that's engaging you gets to tell you how to do your job and when to do your job. Whereas a contractor, they have the freedom to dictate how that job is done. And from an independence perspective, then we're looking at, are they operating independently? Do they get to choose which contracts they take, when they do the work, and so on. Now, the High Court has said, as Cheryl Ann pointed out, says, well, all of these indicia should be looked at through the contract. So you need to look at the terms of the contract to dictate whether or not you're an employee. So it's the ATO's approach, and the Tax Office have just come out with a decision impact statement in relation to their personnel contracting case. And they said, well, what the High Court has said really also dictates whether you're an employee or a contractor for tax purposes. And it says that the primary thing to look at is, what does the contract say? And again, just because the contract says that you're a contractor doesn't necessarily mean that. You've got to look at, well, what does the contract actually describe as the relationship between the two parties? So you then look at, well, does the engaging party get to dictate how you do the work, when you do the work, and how are you paid? Do you get to subcontract the work to other people, or do you have to do the work yourself? So you're really looking at what the contract says in order to determine whether you're on the side of the employee or the employer. So very similar to what Cheryl Ann had discussed, is that the ATO's approach. What the ATO did say is that the High Court has not disturbed the well-established practice of examining the totality of the relationship. Again, the contractual terms are key, but you do need to sort of look at the overall relationship between the parties. And again, the High Court has said, well, just because the contract says something doesn't mean that's the end. You can look beyond that contract where you've got a sham contract. So where there's been a genuine dispute that this contract isn't what's actually happening, where you've got an oral or partly oral contract, you really then need to look at the totality of the relationship, or if the contract terms have been varied. So the ATO says in those circumstances, you do get to look beyond the contract terms, look at the totality of the relationship, and then you can look at that multifactorial test to determine whether you're an employee or contractor for tax purposes. But one of the key things that the decision impact statement labours on is in relation to that control. So it's again that master-servant relationship. So does the engaging party get to determine how you do your job? And if you looked at that, the personnel contracting case, you've got the British backpacker. He was told by personnel contracting, you have to go and work for Hansen and do what Hansen does. So personnel contracting have that control. Again, they could fire him if he wasn't doing what Hansen told him, not Hansen. It was really personnel contracting that dictated the terms of when he did the work, how he did the work. So again, under the tax law, he would be regarded as an employer. Contrast that with that ZG Operations and Jamsec case. Well, they've really, they're using their own trucks to provide delivery services. So while they are driving those trucks, I think the use of the trucks was a key issue in that particular contract. So that would fall on the side of a contract for tax law purposes. But then we need to also then look at the Superannuation Guarantee Law. So the tax law looks at the common law. So what do the court cases say? The Superannuation Guarantee Law varies slightly from that. So it says, well, while we do rely on common law, we also go a step beyond that. and I'll just read you one section of the Superannuation Guarantee Act, and it says, if a person works under a contract that is wholly or principally for the labour of the persons, the person is an employee of the other party to the contract. So while you might be a contractor for employment law under the Fair Work Act, even if you're a contractor for those purposes, if you are providing labour and really nothing else, then you could be regarded as an employee for superannuation guarantee purposes. So that means that the engaging party, even though they don't have to pay tax, also withhold tax from you, because you're a genuine contractor for other purposes, they might still then be required to pay superannuation guarantee because it's their contract is principally for the labour of that individual. Next slide, please. So what are the implications? So if you're an employee, the employer has to withhold pay-as-you-go withholding from the pay. So your traditional employer-employee relationship, you've got to withhold tax from the pay, remit it to the tax office, provide a pay-as-you-go summary, or it's all electronic now. You have to pay superannuation. So 10% of the gross amount of the pay. You need to include the wage and the superannuation and fringe benefits in payroll tax calculations that Stephen will talk about shortly. Workers' compensation insurance and fringe benefits tax. Whereas if you're a contractor, it's the opposite. So there's generally no withholding unless there is no ABN supplied. You only have to pay superannuation if it's wholly or principally for labour. But potentially there's payroll tax calculations required. Stephen will talk about that. Depending which state you're in, potentially workers' compensation, but there is no FBT for non-employees. So on the next slide, we'll talk about what happens if you do get it wrong. The penalties. So the Tax Administration Act levies penalties equal to the amount that you should have withheld. So if you should have withheld $5,000 tax and you didn't, then the Tax Administration Act can actually penalise you $5,000. So you actually paid the same amount. If you haven't made a pay-as-you-go withholding when you should have, then the tax office can disallow a deduction for the payment actually made to the worker. So it's even worse. You get fined and you don't get a tax deduction. Now, superannuation guarantee is even worse. You get penalties, you get an administrative charge, you get interest, plus you've got to pay the superannuation guarantee, plus you don't get to claim a tax deduction for any of it. Payroll tax, significant penalties and unpaid tax interest, fringe benefits tax, penalties and general interest charge. Now, probably the worst thing is if the employer, let's assume it's a company, hasn't paid any of those and the ATO finds out, they're required to pay the pay-as-you-go, required to pay the superannuation guarantee. If the company doesn't pay those, then the ATO can issue a director penalty notice, and that puts the liability personally onto the directors of the company. And that's the worst case scenario. And the directors then have 3 weeks to deal with it, otherwise they become personally liable. So significant penalties in getting it wrong. Next slide, please. So finally, from a tax perspective, I'll just talk about some key myths to avoid. Now, the ATO does have a lot of information about employees versus contractors, and they've said following these high court cases, they're going to review a number of rulings, but they've got a myths and facts information sheet on the tax office website. Now, the first myth is just because you've got an ABN must mean you're a contractor. No, it doesn't. Again, you're looking at what is the actual relationship under the contract. If it falls on the side of an employee, then the ABN means nothing. Do you have a business name? Does that mean you're a contractor? Exactly the same as an ABN, so no, not necessarily. Now, one myth is in relation to you cannot work more than 80% of your time for one employer. Otherwise, you're an employee. Now, that's not right. The 80% test comes from some personal services income laws that apply to contractors, and but it again doesn't mean that you're necessarily a contractor. You've got to look at the terms of the contract and what they dictate to determine whether or not you're an employee or a contractor. Now, if an individual wants to be a contractor, then they must be one. Again, that's a myth. You've got to look at the terms of the contract and to indicate the indicia of employee versus contractor. Now, we have seen that in the past, some businesses would only take on contractors with a view to avoiding superannuation obligations. So they say you must provide me with an ABN and be a genuine contractor. Again, it doesn't necessarily mean you get to avoid that, that superannuation. So one, you look at the terms of the contract, and then two, if it's wholly or principally for labour, then the Superannuation Guarantee Act generally means that you will have to pay superannuation. So there's a lot of myths and misconceptions, and the ATO does have very good information on that. That's it from an income tax perspective. So I'll now hand back to Liliana. Thank you.
Thanks, Jamie. Superannuation is definitely one of those things that employer must get right, particularly considering the personal liability that falls onto directors to comply with superannuation obligations, as you mentioned. Lastly, I would like to introduce indirect tax specialist Stephen Baxter, who will cover the payroll tax exemptions for contractors and the expanding payroll tax risks of employment agent status. Over to you, Stephen.
Thanks, Liliana. Before starting on the payroll tax exemptions, I might give just a little bit of background to payroll tax itself. So next slide, please. Payroll tax is a state tax paid periodically to the state revenues. It's paid on a wages base, including superannuation and fringe benefits, and the payroll tax rate applies to taxable wages above a tax-free threshold. Mazars has offices in Queensland, New South Wales and Victoria, and in the slide here I've got a table of the payroll tax rate and tax-free threshold combinations in those three states. The combinations you see are those that apply to the majority of payroll tax payers. Next slide, please. The payroll tax base includes wages paid to common law or employment law employees, so your typical employees, plus payments made under certain contracts. Now, it's critical that an employer determines the employment law or common law employees first, and the reason being that none of the contractor exemptions that I'm about to go through will apply to the payments made to employees, even if looked at objectively that they might be short-term, casual, or only occasional employees. Next slide, please. The relevant contract is one where a person in the course of a business carried on by them supplies services to another person for in relation to the performance of work, or is supplied with persons to perform work, or in certain piecework scenarios. You'll see that this is a very wide definition, and in order to bring the payroll tax base back to, if you like, employee type services, the states include a series of exemptions, 7 to 10 in most cases. And to discuss these exemptions, I will refer to the typical transaction where a contractor is supplying services to a principal. Next slide, please. Okay, in the next few slides, what I've done is I've summarised and grouped the exemption legislation for Queensland, New South Wales and Victoria. I should add that the words are a summary. They are not the exact words that you'll find in the legislation in each case. But let's go through them. Exemption 1 is the supply of services is ancillary to the supply of goods. These are the contracts where the fundamental object is the supply of materials or equipment, and an example of those is tradesperson services. Exemption 2 is where the services supplied are not ordinarily required by the principal and are performed by a person who ordinarily performs those services to the public generally. For small businesses, they can often avail themselves of this exemption because, you know, quite often they might be acquiring construction or repair or other one-off services that they don't ordinarily require in their day-to-day business. Next slide, please. The third exemption is what's known colloquially as the 90-day rule. The services are provided by one person for periods that in aggregate do not exceed 90 days in the financial year. In other words, the exemption is based solely on the number of days worked by the contractor. It's important to note that even if the contractor works for just an hour a day, that's treated as a whole day. And it'll be interesting with you know, the working from home arrangements that have been required under COVID. You know, what happens if someone is doing a short bit of work on the weekend, replying to some emails, etc. You know, theoretically that could be treated as a day's work in determining whether this exemption applies. The fourth exemption are where the services are of a kind ordinarily required for less than 180 days in the financial year. The focus here is not the number of days the contractor works, but it's the number of days that the principal needs that type of service. The examples the state revenues give are typically on seasonal work, and you know, they use the example of a ski resort that you know, in Australia at least, will definitely not need the services of ski instructors for 180 days or more. What is interesting about this exemption is you can have 50 ski instructors at the same resort working for 4 months and the exemption applies. It doesn't accumulate their time. I should add that this exemption is available in non-seasonal scenarios for professional firms and in other white-collar scenarios. Next slide, please. The next exemption is the one that's most often subject to litigation of all the ones we're discussing. It's where the services are performed by a person who ordinarily performs services of that kind to the public generally. In other words, the contractor provides the same type of services to more than one principal in a financial year. Now, you need to remember it's the principal who has to claim this exemption. And the best case scenario for the principal is if they can prove that the contractor provides services to more than one principal concurrently, that the contractor generates as high as possible income from the other principals that contractor is not tied to them, but can work for more than one principal, and that the contractor publicly promotes their services, you know, by advertising or their website. The principal needs evidence of the contractor's activities, the contractor's business. As unfair as that is, that's often the sticking point. When the Revenue Authority knocks on the door, the principal may not have evidence that the contractor ordinarily performs services of that kind to the public generally. Next slide, please. I just want to wrap up this contractor exemption section with the final two. The exemption 6 is where the contractor engages labour to perform the work. In other words, 2 or more persons are engaged by the contractor to perform the work, and the services supplied by the persons must be a necessary part of the service delivery, if you like. It's not enough that one person does all the work and the other one might just answer phone calls and issue invoices. The 2 people must be engaged in the service delivery. The final exemption is just a grab bag of obscure sort of sectoral activities which are not, this exemption doesn't apply in all the states and territories, but they are services provided by owner drivers, by insurance agents and by door-to-door sellers. An important point to note is that when the Revenue Authority comes knocking on the door, these exemptions are hard to prove unless you're aware of the arrangements in place and unless you have evidence that meets the exemption tests. A recommendation that we would have is that you start accumulating that evidence at the start of the contract. You start requiring the contractor to provide evidence that they are providing services of this kind to the public generally, and that you keep very detailed records of the number of days they might work for you. We might move to the next slide, and I'm just going to finalise this section with a segment on employment agents, and if we can have the next slide, please. Now, the state governments have had a few goes at trying to apply payroll tax to what we might traditionally think of as labour hire arrangements, and those are the ones where we'll call them a contractor provides basically the services of themselves to a principal who provides them to a client. Now, who's the employer? Who pays payroll tax? Well, under the employment agent regimes in the various states and territories, the principal is treated as the employer and the wages are treated as the amount paid to the contractor. What is really important here is that the contractor provisions are in effect ignored if the principal is an employment agent. So those 7 exemptions I've gone through, they will not apply, even though in so many cases in a labour hire scenario, they would normally apply perfectly, the 90-day rule, etc. There are some exemptions that apply where the person is placed at, say, a charity or a hospital, but largely it's the loss of those contractor exemptions, which means that if you are caught as an employment agent, your payroll tax liability will be much higher than it would otherwise be. Next slide, please. Next slide. Yep. Okay. Now, what is an employment agency contract? It's a contract under which a person called an employment agent procures the services of another, a service provider, for a client of the employment agent. It doesn't apply where the service provider becomes an employee of the client. So in other words, you know, in simple terms, it's applying to labour hire services. It's not applying to typical recruitment services. That definition I've described to you is vague and may, you know, may mean nothing to many people in this scenario, but it has been determined by the courts to mean that the individuals, the service providers, are added to the client's workforce. They help the client conduct its business in the same way as if they are employees, and they're integrated into the client's business. They're not just working for the client's business. Now, that of itself doesn't necessarily make it as precise as we would like. And if we can go to the next slide, what I've got here is just examples of the industry sectors that, or some of them, that have had litigation under the employment agent provisions and what the result was. And it's a little bit of a concerning list because you'll see there in the security services and the hotel and office cleaners, some of the decisions have gone either way. Other sectors where they've been found to be employment agents are those who place construction workers, in one case a freelance service provider, and in another case IT workers. What I'd have to say about the employment agent provisions is they're obviously very damaging if they apply because of the loss of those contractor exemptions, and they're also vague, and it's, you know, there's a great deal of uncertainty whether a particular business is caught by them. I would suggest that in any business which in effect provides people to a client of it needs to look at the employment agent provisions very closely, and I would think seek advice at the beginning. I might bring it to an end there and hand it back to Liliana.
Thanks, Stephen. Very interesting presentation indeed, and very important for employers to consider substantiation requirements when they wish to apply one of the contractor exemptions that you mentioned. It is just paramount to obtain, obviously, the right advice in respect of that. And now I'd like to open it up for questions and comments. Click on the speech bubble below me and provide your name and email address, as I mentioned before, just in case we don't get to your questions today. I might start with one question that I received during the presentations. I have a tax question here, so this one might be for Jamie. I am an IT contractor and I'm contracting on a part-time basis, providing coding services to 2 Australian companies. My contract charges $75 per hour, all inclusive, with no additional leave, superannuation, etc. I use my own ADN and provide invoices each month for 20 hours per week for each company. Does this mean that I might be entitled to superannuation?
Yeah, great question, Lily, and it's a question that's not uncommon. I think certainly people in the computing industry, there are a lot of so-called contractors, and have been asked that question time and time again. So again, I guess reflecting on the case law, you've got to look at what does that actual contract say in terms of whether or not there is control over what the IT professional does. So who dictates what they do, how they do it, when they do it. That will be largely determinative of whether or not they are an employee or a contractor for tax law purposes. And then from your superannuation question, you've got the added layer of the Superannuation Guarantee Act that talks about whether the contract is wholly or principally for the labour of that person. Now, I would think that in a lot of cases, the IT contractor is really providing their own labour. So it's then looking at, well, are they providing just their own labour, or are they providing labour of many different people? But in most cases where you've got a single contractor providing their services, superannuation guarantee will be a real risk.
Thanks, Jamie. I have another question here, and this one is about payroll, so it might be appropriate for Stephen to take that one. Regarding the 180-day rule for payroll tax, what are non-seasonal examples where it could apply? You are on mute, Steve.
Yes, the test is whether the services are of a kind ordinarily required for less than 180 days in the financial year. So it's important that we don't think that we can divide up a year into 4 months and have 3 short-term employees to perform that work in order to meet this test. It is based on how long during the financial year the employer would need those services. Now, some examples I can think of might be where, say, an organisation that is applying for grants from a government or tenders from customers has a 3-month window, 3 or 4 month window between receiving the invitation to tender and lodging, and they bring in a contractor to assist them to prepare their tender. And another might be where a major retailer has a big product launch, a big sale, and they bring in a contractor for just that short period to prepare for that launch. So they are, you very much have to look at each business and to decide, is this role or activity something that the business needs all year, or is it something that the business only needs for certain periods during the year? And they may not be seasonal. They may be just in terms of the business cycle. And if you can find the business scenario where the employer only needs the services for a period of less than 180 days in the year, then this exemption may apply.
Thank you, Steve. I have a question that has come through from the audience as well just now. It says, could our contract be written so that the contractor agreed to indemnify the principal if the principal was hit with payroll, tax, super, pay-as-you-go assessments? Is that likely to be enforceable? Maybe Sherry Lynn, you would like to answer that question?
It's an interesting question, but I think that the simple answer is, in all likelihood, no. At the end of the day, if a court was to make a decision that someone was an independent contractor or an employee, you could not require the person who was party to that contract to indemnify you from what might flow from that, would be my view. Others may have a different view, but I would think that would be an incredibly risky position to take.
Thank you, Sherry Lynn. I have another one here. Jamie, maybe this one is for you. Can we keep our administration lady as a contractor but pay her relevant superannuation to her super fund? We include her administration invoice amounts in our workers' compensation total too. Is this okay?
So I think that the question is asking whether or not you can pay the administration lady as a contractor but still fulfil superannuation obligations at the same time. So I think the question then comes down to, are they really able to not withhold tax from the administration person's pay? And again, it would come down to the contractual relationship, but if the administration person is really just providing his or her labour to the business and really nothing else, and that's in the contract, I would think that that's leaning towards the indicia of an employee, and therefore there are all of those employment obligations. So to withhold tax, sounds like they are paying superannuation, but there's potential payroll tax, there's workers' compensation. But I think the key thing that's missing from the facts is that they're not withholding tax. So they'd have to withhold tax, and there's the penalties for not doing that I mentioned earlier.
So there is a risk there still, obviously. There's another question that could be for any of you, really. Are there any particular industries who need to be aware of the implications more than others? If so, what are these?
Yeah, I'll take this one because we do see this a lot, and I think that the two key industries are probably the IT contractors that I mentioned earlier, and probably the, I guess, the cleaning industry, that often hire contract or casual cleaners, and then also the building industry. I think they're probably the three key industries where we do see a lot of engaging people as contractors when often they would fall under the employee laws.
Thank you, Jamie.
Can I just add that I think IT, I think expand that to anyone involved in management consulting, change management, etc., because that's another field where most of their work is actually the deliverable is an IT, but the use of contractors in those sectors is almost universal.
Thank you so much, Steve. I have another one here. It says, if you need to tighten up your contracts, what date do you place on this contract? Do you date it the date that the amended contract is signed, or do you backdate it, assuming to the original date of the contract?
I can take that one if you like. No,
Thanks,
you would date the contract on the date that the contract is signed. You can't post or predate or post-date the contract. But one of the things to remember is that since the High Court decision was released, that is the principle which will be applied to determining whether or not someone is a contractor or an employee, even where the arrangements existed before February 2022. So essentially the way this will be decided has been changed irrespective of when the relationship commenced or even concluded. But in terms of your contracts, no, you need to date them on the date that they're actually entered into.
Thank you, Sherry-Lynn. I have another here that says, can I safely require my current employees to become independent contractors?
Probably not. It really depends on what they're doing and the whole factual situation. And if you did want to change, depending on what they do, what sorts of services they provide, it's whether or not there is a genuine contractor arrangement in place that can be reduced to writing. But if you're just talking about perhaps people who are traditionally employees, the answer is probably that you can't safely do so, particularly if it might fall within those sham contracting provisions in the Fair Work Act, where you simply decide, I'm not going to employ people to do this anymore, and so I'm dismissing you, but I'll engage you as an independent contractor the following day. Those sorts of arrangements are likely to still fall within the sham contracting provisions of the Act.
Thank you, Shirley-Ann. And I think we just have one more question. It says, where does a consultancy service contractor who provides principally labor-only services as a consultant, for example, advisory services, where does that contractor fall regarding superannuation guarantee?
Yeah, again, you need to look at all the indicia that there is that superannuation guarantee legislation that does say that an employee for superannuation guarantee purposes is a person that works under a contract that is wholly or principally for labour. So it really depends on the facts and circumstances, but if you're just working for one organisation for a period of time, really just preparing or providing labour, then it's likely that superannuation guarantee will apply.
Mm-hmm. I know I said it was the last one, but I think a very good one has come in, and maybe Steve, you would be able to answer. If a contractor qualifies for payroll tax purposes, do we automatically have to pay super? Can a total inclusive rate in the contract cover the employee from not paying super?
I think that might be better for Jamie. Yes, I don't think that's a payroll tax question.
Okay,
I'm
so
happy to take that one. Look, if there is an obligation to pay superannuation guarantee, you cannot contract out of that. So you cannot just charge one rate that's inclusive of superannuation. You've got to pay the wage or the fixed amount, plus then separately pay an amount to the superannuation fund of that individual. So if there is an obligation to pay superannuation, you cannot contract out of that as an inclusive rate.
I perhaps should just add that the classification as a contractor for payroll tax will not drive that outcome. That will be under the ordinary contractor provisions.
Excellent. Thank you very much, Steve, Shirley-Ann, and Jamie, for your very insightful presentations and your explanatory answers to all the questions. I think that's all we have time for today. Thank you for joining us. Thanks again for watching, and enjoy the rest of your day.